All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar, but I welcome you all back. So we're going to get started with our analysis this morning. Let's go ahead and grab a bias chart. And so, as you guys probably know, the euro dollar really moved quite aggressively following the weekend's events and the news over the weekend. So now as we approach the election, I'll tell you, I'm not really too comfortable, obviously, trading at this point. I'm going to clear some of this stuff out really quick. Let me remove, because we'll redraw them. I just need to remove a lot of this stuff. Here, let me go over to intraday stuff and let me mess with these charts. Okay. So on Friday, we talked about, the euro coming under some pressure, and if it did, it'd come down to where we're at support right now. So I'm going to redraw all this stuff, so don't worry about it. Okay. So so if you take a look at the euro dollar, and it's, believe it or not, it's pretty well behaved, technically. You can see how here, let me grab the right pen. You can see how we came to, all this, previous support here. Okay. We rejected there on Friday. We came down, and now we are, pushing, previous resistance, which is current support too. So now, when you look at the euro dollar, it actually makes sense to be a buyer down here. I'm not brave enough at this point to try to pick up the euro dollar. Although I think that if you're going to be a buyer, this is the place to do it, right? Right here, because this is previous resistance, current support comes in at 110.40. So, I mean, that's support. It's not great support, but it is support. All right. Resistance is where we rejected on Friday. So you have to think about like possibly a gap fill. Well, if you go from this spike high up here to the low, that was a 50% retracement. But more importantly, if you go from the actual high, the high is a 38% retracement, right? And so that 38% retracement came right into play on Friday at 111.40 and then rejected. So, the risk reward trade is to buy the euro dollar right now. Now that's risky, because if you're buying the euro dollar right now, you also have to be in the camp that this stock market futures are about ready to roll over as well. Again, maybe it is, maybe it isn't. But if buying the euro dollar makes more sense at this price, okay, from a risk reward perspective. And again, but you got to think, you got to put all the politics into play here, and you can say, well, if Janet Yellen, if Hillary Clinton is to win, I actually want to be long the dollar, theoretically. Well, then maybe instead of trying to buy the euro down here, you look to sell the euro on rallies up to like 111.20 to 111.30. And maybe that makes even more sense. Okay. So just some food for thought. Okay. And again, I'm not, I myself, I'm kind of, I'm going to play it easy until, the election, but I'm just trying to give you guys some barriers. You kind of, know where your sandbox is, know where you got to play inside of. And I think these are telling you that. Okay. All right, let's go over to the cable. So the pound came under pressure, and the pound, which was spiking, aggressively going into Friday, and I thought, God, I thought we were heading up towards 128. Obviously this news over the weekend just put the pound right back down again, which is scary because what that suggests to me, here, let's do this. What this suggests to me is this breakout right here, that false breakout above there just squeezed a bunch of people. You know what I mean? That was like that was just more of a squeeze. So that really took out so many shorts when we went above the 25 level. It basically just squeezed everybody. So now that we're where we're at right now, I think any move back up to 125 is going to find some sellers, because now people are like, oh, I'm stuck long. I just went out. Um, okay, so we have we're in a range, and just think about this: the top end of the range is like 125. All right, now support should be pretty easy in my opinion. It would be a move back down to 123 and a quarter. Okay, let's get rid of this one. So if you want to go long the cable, 123.25 is probably the place to do it. All right. Let's take a look at the Swissy. So the Swissy has enjoyed a bounce. Now here we were on Friday. Like hell, any dip down here will be a good buying opportunity. Any rally up here is going to be a good selling opportunity. Well, I'm getting rid of these things here. Okay. So on Friday, we were pretty much nosediving in the Swissy, and then, obviously we got this gap up. So again, if you're looking at the dollar Swiss, I still believe, I believe that at this point in time, your support is going to be down here if we can get down there. Now it's more of an if. So any dip towards 96.40, and then any rally up towards this resistance up here, which is 98.50, you got to be a seller. And you just, while you're here, it's near impossible to play. I mean, unless you get lucky, it's just you want to trade the extremes if we can get to them. All right. So 98.50 is resistance. And support is going to be down here at 96.40. And while you're stuck here in the middle, that's anybody's trade, huh? 96.40. And we are back in our range. Now let's go take a look at the U.S. dollar Japanese yen. Okay. So here's the dollar yen. The dollar yen was, and Paul made a great point. The dollar yen held up really well on Friday. It's like almost like the dollar yen knew. The crazy thing is it wasn't selling off with the rest of the dollar pairs. It was just kind of holding there. Now we gapped up, and let's remove that. Let's draw this. So basically, we're at a 618 retracement. We might get up towards 105, maybe. Okay. But a move up to 105 will probably give you a good selling opportunity. For those of you that don't think, again, if you're anti-Donald Trump, so you think that Donald Trump is, or excuse me, if you think that Donald Trump's going to win, okay, you think he's going to pull one off, you want to be a seller up here at 105. If you think Clinton's going to win this, then you want to be a buyer back down here at 103, because that's where we closed. I think for those of us that are just waiting until after the election, you probably just want to stand aside here while we're trading in between this 105 to 103 level. And we're in the range as well. Okay. Now, let's go over to the dollar Canadian. The dollar Canadian is this one here. I'm surprised. I'll say that. I'll say that much. I'm surprised that with the Trump or the news about Hillary Clinton and the FBI. I'm surprised that the dollar Canadian didn't expand on these gains. So the dollar Canadian, the Canadian currency didn't expand on the gains. The dollar Canadian gap lower, and then we've already filled the gap. So what that tells me, though, is the dollar Canadian is very, very well supported above 133. Okay, very well supported. We have this trend line that on Friday we were kind of making our way up there. We didn't quite make it all the way up there, but you can see that resistance is going to be 135 now, and then support be at 133. All right, again, if you're a Trump supporter and you think Trump's going to win, you want to be a seller up here at 135. If you think Hillary Clinton's going to win, or excuse me, if you're a Trump supporter, you want to be a buyer here at 133. If you think that Clinton's going to win, you want to be a seller up here at 135. Because if Clinton wins, it's going to be good for the Canadian currency and the peso, more than likely. Okay, so, but I think those are your parameters. I don't think you can do really much while we're sitting at 134. We're just kind of in the middle. $133, 135, and we're actually still in a bullish breakout. 133, 135, and we actually are still bullish here. All right, let's take a look at the Kiwi. Now, the Kiwi is actually performing really well. You're probably sitting there going, well, why is the Kiwi doing so well and the dollar is so strong against other currencies? Same with the Aussie. Why is that? Because it's risk appetite. You know what I'm saying? Right now it's all risk appetite. As stocks go higher, these commodity currencies are going to outperform. Okay, and that's why the Kiwi dollar didn't drop 70, 80 pips like the euro dollar, okay, or the cable. The Kiwi's holding up well, the Aussie's holding up well, and that is due to risk appetite being elevated. Now, the Kiwi, I still think we have to look in the same lens here. It's capped by this AB equals CD. And if we do breach into new highs, resistance, I think, is going to be more important up here, which is 73.60. So we have 73.40, and then even if we go into new highs, 73.60. So let's write down both of those. 73, because I don't want you to sit there and get really bullish on a break of new highs, and then you realize that you're just hitting it, you're just knocking your head into more resistance up here. Okay. Now, support is right here at 72.75, and the same thing as it was last week. I don't think anybody who's bullish the Kiwi really is too worried about it while you're above 72.75. If you get below 72.75, that's going to open up some downside, in my opinion. All right. All right, let's go ahead and take a look at the Aussie. Do that one really quick. So here's the Aussie dollar. The Aussie dollar is, I think this one is waiting on the election. I think the election is what's going to, be the catalyst that drives us, out of this triangle. Now, to me, it looks like we're going to break to the upside, and I mean, it seems very buoyant to me. But that's not necessarily going to be the case. I'm just saying, to me, it feels like it's going to break to the upside now. But you always tend to feel that way when you're at the resistance. So 77.50, obviously that's a breakout point, and then supports, it's creeping up, and it's at 75.70, and I think you need to let it get out of here. Whether it's a break to the upside or because our first resistance is 77.10, then after that is 77.50. And the support really doesn't come down until what, 76, 75, 75, 70. And really, I think leaving alone the Aussie right now just makes sense to me until we can definitively break out of this triangle. Okay. All right, guys. I'll be back in a few minutes. When I come back, we will continue on with the dollar index. We'll talk about the peso, Swedish krona, Norwegian krona, all that fun stuff. So don't go anywhere. I'll be back in a few minutes. Thanks. Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar, so we got to finish up our analysis here. Let's go over to the dollar index. So here's the dollar index, and this the news over the weekend obviously had boosted the dollar, which I guess the good news about all this is we know kind of what direction to trade. If it's a Hillary Clinton win, it's the dollar's bullish. If it's a Donald Trump win, the dollar's bearish. So that's good. Unfortunately, what's happening is we're going to end up smack dab in the middle of this up channel, kind of leaving everybody hanging. And that's how I feel about the dollar at this point. It's like, okay, well, I want to be a buyer of the dollar down at 96, and I want to be a seller of the dollar up at 99 or 100. But what do you do between now and then? You know what I mean? That's the tricky part of it right now. It's like there's not much to do at this moment. I think if we can, if we can think about just some moves near term that we might get, you might get the dollar, ahead of tomorrow's election. We might rally to maybe like 98.20. Okay, and I think that's possible, between now and the election. The flip side is maybe we come back down here and we fill this gap right here, basically at 97 roughly. Okay, so let's think about that. Like a 98.20 move, it might not be a bad place to short the dollar. A move to 97 might not be a bad place to be on the long side. Again, if you think Hillary Clinton's going to win, you want to be a buyer of the dollar index down to 97. If you think Donald Trump's going to win, 98.20 is probably the area you want to be on the short side. And while we're here, right in the middle, just don't know if there's a lot to do. You know what I'm saying? All right. Yeah, I think it's we're just kind of stuck in this range. All right, now the peso. Although the peso had a very aggressive move over the weekend after following the Clinton news, the approach in the peso is really simple. Okay, very very simple in my opinion. A break below 1840 following the election. I'm gonna you're gonna hear the same thing come out of my mouth for 2 days in a row, maybe even 3 days. If Hillary Clinton wins and we get a close below 1840, that 200-day moving average, we'll know we're below the trend line. We'll know we're below the 200-day moving average. It's a short. Okay. If Hillary Clinton wins, and that to me is like very easy following the election. Now, if Donald Trump wins, we're going to trade well above 20. Just so you all know, we're going to probably 21 or maybe even 22. Okay. Now, a lot of you might be thinking, well, it makes sense just to be buying the U.S. dollar Mexican peso here. I think this news, over the weekend, may have done the trick to put Clinton over the top. I think that confidence is still pretty eroded in the Clinton camp, or for Clinton in general. All right. So that's why I think it's still going to be close, but too close to really trade at this point. Okay. 1840, and then to fill a gap here would be at 19. So let's just, and actually I'll say 1850 and 1840. So I'm going to do 1850, which will be well, actually whatever these lows are, 1845. Okay. So let's just write that down, and I think you got to stay away from it unless we get to either one of those areas. 1845, key support. 19 would be resistance, and we are in a range. All right. Let's go over to the Norwegian krona. So the Norwegian krona got a big bounce off of this trend line that we've been monitoring for the last, week or whatever. Week or two. So big trend line, bounce off of there. We came down to 38% retracement. Basically, 814 is support. We're up at resistance at 822, but I'm just going to write down resistance right here. Okay, so 830 to 814. And we're right in the middle of it. And this is going to be we're still in range here. US dollar, Swedish krona. I mean, that's what's so frustrating to me on this US dollar, Swedish krona is that I had nailed the buy here. Not nailed it, but I had, I was long at 891 or whatever, and I got out for I flatted it. So frustrating. $909, 888, and it's bullish while we're still above it. 888, 9.09, and it's still bullish. Okay. All right, your bias chart is done. It is finished here. Um,